Hello and welcome back to today's personal finance show here on Dublin City FM with me, Paul Merriman from askpaul.ie. Before the ad break, we said we're going to have a guest in the studio, and that guest is Eoghan O'Hara, who is the head of Ireland for Raisin.ie. Eoghan, you're very welcome to the studio.
Thanks for having me, Paul.
So Eoghan, you've been on before, but we have you back for a really special reason. I am excited, delighted, actually really proud to say that here at askpaul.ie we have teamed up with Raisin to deliver deposit rates to Irish consumers that are really going to compete against Irish banks. So obviously you guys are in the marketplace already. We've been in the marketplace for quite some time in the industry, obviously 20 years, and the Askpaul brand is around 8-9 years, and PAX before that, and obviously now Fairstone too. So yeah, you might bring listeners through yourself on what we're doing, and hopefully get them as excited as I am.
Yeah, big time. So yeah, we've been in Ireland operating since 2019. Our website has been up. We're a German company in Berlin since 2012, but like I said, in the Irish market since 2019. Things have been going very well, as I've discussed on your show before. And we were thinking about next steps as what we can do to maybe further integrate into the Irish market, and we thought that teaming up with the Askpaul brand would be exactly what we were looking for.
Okay.
I think, what we're trying to offer people is an alternative to their savings, and sometimes what it takes from people is maybe a little bit of guidance, a trusted name to make it the process that little bit simpler.
Yeah.
And of course, the Askpaul brand is very prevalent in the market, so yeah, we're delighted as well.
Yeah, and I said I'm delighted, and you know what? It's a move for us in that we've been championing Raisin.ie well before this partnership, I suppose, because to me, for the Irish consumer, I still have a massive issue with how much they're being ripped off by Irish banks and the poor deposit rate. I think I've seen something recently around Bank of Ireland's average deposit. I think it's their half-year review was 0.7%, so 1%. And obviously you put dirt on top of that for the majority of their client bank, I would have presumed. It's obviously a ridiculously low return, and especially we know inflation is hanging between whatever 1.7 and 2%. From a financial planning point of view, short-term savings, you need to be beating inflation, or at least matching it. But you don't want your money devaluing. And I think there's 160 billion on those kind of overnight rates, with practically zero. So I think there's a massive education piece. The Askpaul brand's always been here to educate consumers from day one. That's what we've tried to do. So yeah, I'm excited. I think it's great, and it gives us, to be fair, a chance to compete back against those banks, because even those banks, they still have financial services and financial products that are tied to one life company. Like if you look at Permanent TSB, they're typically just tied to Irish Life, and they're exceptionally expensive for clients to do any type of protection, life assurance, mortgage protection. You would never look at a pension product or investment product, or you should never look at a bank channel, because they're so expensive to operate. The commissions in charge are usually exceptionally high. So yeah, I think it's great for us as well. I think it puts us in that competitive space, which we're always trying to do for our clients. But look, for those that may not know what Raisin is, why don't we give listeners a kind of one-stop tour while they're here?
I'd be delighted to, yeah.
So
I'll focus on the Irish platform, given that's what we're speaking about today. So the idea of Raisin Ireland is it's an online savings platform. It gives Irish savers access to 29 banks across the Eurozone, all through one online account. Like, I think we're all very much used to flying around Europe and, the freedom of movement of people. We don't often take advantage of the freedom of movement of capital. And what we're doing is a launch pad for you to access better savings rates abroad.
And let's talk about this, because that freedom of movement, of capital is part of being in the EU. So we always know, being part of the EU in Ireland, we've benefited massively. When you look at our roads and look at the security infrastructure we have as well, being part of the EU, and the trade and everything else that comes with it. And when I started off Askpaul, we used to get this question all the time: can we get a mortgage from a German bank? Can we get a mortgage from a French or a Spanish bank? Because their rates were really low, and Irish rates are really high. Actually, one of the first videos that kind of went viral for the Askpaul brand was me on Snapchat. I think I was in Madrid at the time, and I was outside Santander, and I was like on my phone outside the branch, and I was explaining to viewers that I was just in the branch. And you could get, I think it was a 1.8% rate, if memory serves me correctly, fixed for 25 years for first-time buyers. Oh. And we were getting charged nearly 3.8% in Ireland at the time. I think that was the first one. But a lot of people ask, why can't we get mortgages? So people want to borrow cheaply, but yet when it comes to their savings, they don't want to save and make more interest. It's crazy. It's so strange. So like your platform, so let's take myself and my wife Sarah, just even me for example. I log into Raisin.ie, I set up my account. My account has, I put in my AML, which is my anti-money launderers, my photo ID and my utility bill proof address. And then I have access to the 29 banks that you have. And they range in all different types of interest, whether you want to go 1 year fixed, 5 year fixed, 7 year fixed, etc. right the way through.
Yeah, exactly. But like the beauty of the platform with the amount of banks we then have, over 150 different types of savings accounts you can save in. So the customer, it's a self-service platform, and the customer will decide, what suits them best, whether they want the overnight accounts, we're called the demand deposits as they're called, which means you can withdraw and top up anytime. Yeah. Or something that Irish people haven't been good at in the past, if you have the ability to lock your money away, you secure a fixed interest. And I think it's important to point out that these type of savings accounts are all backed up by your deposit guarantee schemes. It's the exact same protection as you get in Ireland. Obviously, each sovereign state within the EU has their own deposit guarantee scheme.
So it's up to 100,000 euro.
Exactly, yeah. So if you have the ability, and I'm 100% appreciate not every saver does, to lock it away, you can, like you said, beat inflation, because there's rates on the platform up to 3% at the moment. Yeah, that's for a very long term, but for the shorter term, even a year, we all know a year flies by.
A year flies by, yeah.
You can get 2.5, 2.6% on the platform at the moment.
And this is what's really important to me, because from an Irish context, I actually see there's a big campaign at the moment from the state savings. Nearly every second bus stop and bus has about the state savings as a smart thing to do.
Yes.
I was looking at them this morning, it's 2% for 10 years. You lock your money away for 10 years. And to be honest, this is where the financial planning piece and why we're proud to be partnered with Raisin, I suppose, at Ask Paul, is that for a financial planning piece, anyone that sits down with us and doesn't need access to money for 10 years should not be accepting 2% off anybody, because your money will, typically speaking, in a well-balanced and diversified portfolio, achieve well more than that over a 10-year period. And the other thing we get, and we do this at the end of this show as well, we go back to what's called factor fiction. We listen to content from around the world, and other listeners know it as factor fiction from an Irish context. Most people will be familiar at this stage of hearing the word high yielding interest account. And it's massive in America and massive in the UK, where people are really pushed towards a high yield because you're making more interest over that 1 year. But no, we don't have any high yielding savings accounts, so nobody does it. People are leaving the money on the credit union, on posts, in the bank overnight, and it's madness, because your money's just devaluing.
Exactly, yeah.
And the bank, for listeners, like the bank, when you put in 10, 20, 30k, whatever the figure is in the bank, if you don't need it for the year, they don't lock it in a little safe deposit bank at the back of the branch. Like it gets lent out literally the same day to, someone for a mortgage at 3 or 4%, or a credit card at 21 or 22%, or a car loan at 6 or 8%, or else they just even stick it with the ECB and get a better return on the deposit rate with the European Central Bank. So the banks are using savers' money to make profits and keep them on their own balance sheet, which I think is madness after we bailed them out.
Yeah,
I think it's absolutely madness.
A lot of it comes down to as well savers inertia. Like one of the things I like to sort of say is, if I told you that you get 10 cents off your each litre of petrol, you might drive 15 kilometres to do that. But if I told you could make 100 quid in a couple of months on your savings account, it seems that Irish people, exactly, and it seems that is the inertia set in to such a point that people are giving up on what is essentially free money, secured free money.
100%. And let's take this down. Actually, that's a really good point about driving to save your petrol, save a few quid in your petrol. What Raisin have done, in my opinion, is number one, given a massive amount of choice to the consumer. So you got up to 29 banks once you get there. They've taken away the risk if you have up to 100,000 euro. And if you have more, you can just spread it in different banks. So technically speaking, you've got 2.9 million today and spread it across in 29 different banks. Or if you're a couple, you can get 100,000 in each account. So I think the risk is gone. So it's kind of left to the consumer to say, I need to do this for me. Because if the risk is gone and the diversification and the choice is there, what else? Like, what's the problem?
Yeah, of course.
It's the unknown. And I suppose that's what we're hoping to help you with. It's hoping to talk about it more and make this an everyday thing for consumers and an everyday discussion where people are saying, have you got a better interest rate? Are you getting the most out of your savings? And like I said, I'll go back to this from a financial planning point of view. You should really only have your emergency funds and any short-term capital you require, like if you're saving for a wedding or maybe a deposit for a house in the next couple of years. Once you go past, I don't need this money for 5 years, whether it's for kids or grandkids or whatever it is, you need to have a look at a high yield and interest account and an investment account at that stage, because the investment account will more than likely play out better in the long term than it will sitting in state savings here for 2%. And I see, actually, you know what I really hate about those? I went on this morning just to check it because, like I said, I've drove by a few buses over the last few days. And I always think this is misleading. I'm not saying the state is trying to mislead you or on post are trying to mislead you. But a lot of people I've heard in the past saying, I'm getting 10% or I'm getting 20%. It's 2% a year for 10 years.
Yes.
You're getting 20% after 10 years, which is, it's 2% a year. Like saying to somebody they're getting 20% of a return is phenomenal. Saying to someone you're getting 2% for locking your money away for a decade is not phenomenal at all. And in most cases, you're probably going to stand still, if not lose value in your money because of inflationary measures. So I do think there's a little bit of more bigger education, which obviously is what we're planning to do with you guys, and get it out there to the consumer. Can we talk about tax? So I have seen this, a few people come back and say, oh, the withholding tax. But some banks have the withholding tax, some don't have the withholding tax. So this is for a consumer where they go into Raisin, they set up their account, because in Ireland, if you go to AIB, Bank of Ireland, PTSB, you're going to have the dirt automatically extracted for you as the revenue. And the same with the state saver, there's no tax in fairness, not 2%. So what's the process with Raisin? Somebody puts in 100k, they make 2.5%, say, for 12 months. What happens with some of the banks and others?
Yeah, there's a couple of things. So depending on what bank you save with is the first thing. So if you're saving in countries, so we have banks from 13 countries around Europe. If you save with one of our partner banks in Germany, for example, or France or Sweden, top of my head, they won't charge you any tax in their home country.
Which there's no withholding tax.
Exactly. You receive your interest gross, and then it's up to you the next year to make a declaration. I think that really puts people off sometimes, but honestly, it's very straightforward. And in fairness to Irish Revenue, they have some extremely good how-to guides on their website. They actually released a new document in June of this year, which is step-by-step on how to do it, because obviously this is becoming more popular with Irish savers. Now, there is certain banks, if you want to save with a bank in Lithuania or Latvia,
they'll have to withhold.
They might withhold, for example, 10% of your interest, okay? Now, I think most listeners will know, or if they don't, in Ireland, the standard rate of deposit interest retention or DIRT tax is 33%. The good thing about if the Latvian bank take 10% off,
only 23,
exactly,
come back. Yeah, exactly.
So
still is paying your
once again, in fairness to Revenue, it is a fill a box.
Yeah.
It's in 2025, I earned 100k or 100 euro, interest. The Lithuanian bank took a tenner, so I owe you the difference between the 10 and 33%. And it is very straightforward. We've got a lot of helpful pages on our website and links to the rep.
And we're going to be doing a lot more through askpaul as well in relation to explainer videos and examples, etc. as well, for people to get their heads around. And again, I think that's why in America in particular, they're so interested in the high interest savings account. Because look at this before. So when I did the certified financial planning, or what's called the grad dip through UCD and the CFP designation afterwards, so the financial planning piece. When you looked at the kind of financial education of those in the States and even in the UK compared to Ireland, it was really, it was wild. But in the US, they're educated about the tax system and educated about tax before they leave school, and they're pretty much making a return every year anyway.
Yes.
So they don't mind having a direct portfolio trading, they don't mind having their 401k through their company pension or whatever they're doing, because they know how to make the returns. Well, we're all terrified to make a return to Revenue because they think of Revenue as the big bad wolf. Well, that couldn't be further from the truth. I agree. I find them very, very helpful. You get a ring, you get a really good response. And yet, the fact of having to do a return online or even via the post shouldn't be a reason to deter you from earning more money with your money.
Exactly.
And that can't be an excuse, because that doesn't make sense.
It is about people doing a little bit of homework and seeing how easy it is. And I would say as well, if you do save with Raisin, with one of our banks, True Raisin, we give you an annual statement of interest. You don't have to go looking for how much you earned. And like I said, the revenue guides are very helpful. And also, Raisin has a full-time Irish customer service team. Now, we won't give you tax advice, but we will answer any questions
to help you through.
Raisin, exactly.
Yeah, perfect. Okay, excellent. We've a couple of new banks en route. I believe if you look at the expanded network from what you have, from how long did it take you to get to the 29? Around.
Yeah, so when I spoke to you last, we'd gone from in a year, I think we'd gone from 9 to about 25.
Yeah.
Then there's been a couple of more banks added. We're up at 29 now. We will be at 30 by the end of this month.
Great.
To me, that's a nice milestone. It's a nice round number.
Yeah.
But I think it's dispelling the myth. Sometimes I read columns in the Irish media where they're saying there's no choice for Irish savers. We've brought 30 banks to the Irish market for savings.
And that comes back to that capital movement. So, again, part of being in the EU, you're allowed to move capital and benefit from other European states.
Yeah.
And that's what I find so exciting. And the fact that you can do it all in one place, where technically under the capital, under that movement of capital, you could easily go to the bank account up in Germany and get your interest rates, but you're just doing it for them.
Yeah, exactly.
Given, like I said, that almost 30 choice.
Yeah, the beauty of the European banking market is there's a lot more competition on the continent than here. So these banks have to compete for retail deposits.
Yeah, and it's competition, but it's also, I do find, I'm not having to go with Irish consumers too much here, but I do think they don't have the inertia factor. There's no way somebody in Germany would not move for an extra 0.2, never mind 2%.
Yeah.
So they have to keep the rates competitive for the citizens to save with them.
Yeah.
The competition's rife, where there's no competition here actually from the from the consumer looking for it. The consumer's not looking for it.
Yeah.
And we see this, like, the consumer will look for insurance discounts. They look for, again, mentioned this obviously on the mortgages. They look for utility bills. Everything they're spending, when they put money out, they want to get the best deal. But when they're keeping the money, they don't care.
Yeah.
It's just, I think that mind shift is interesting from an Irish context. As you remember, so back to doing the CFP, from a behavioural finance point of view, somebody made a point to me and I thought it was brilliant. Because they have nothing in America, like in America, if you get sick, you don't have health insurance, this hospital system's horrendous. When you get to retirement age, if you don't have your own pension, you're not getting looked after by a state pension. So because they're so fearful of having nothing in America, they're kind of educated on trusts and stock markets and how to make your money work harder for you. And they're always trying to build wealth and make sure they have enough. But because in Ireland, if you go out sick or you go unemployed or when you retire, if there's nothing in place, you have the state pension and you have a really good health system compared to the US anyway. So there seems to be, because we're kind of looked after somewhat, that fear of having nothing or that fear of is not there.
Yeah.
Even when you look at pensions and statistics around pensions, people don't have them because that'd be grand.
And even in the savings statistics, you can see it. Like, if you look at it, this isn't my opinion or your opinion. This is from from the European Central Bank statistics that, on average, European savers have roughly about 55% of their savings locked away. And I'm talking about just deposits here. We're not talking about investments.
Yes.
But their deposits are locked away, getting a fixed interest return in a term deposit. In Ireland, over 90% is in
overnight accounts.
Overnight and even current accounts. Yeah. So we are a bit of an anomaly in the Eurozone. And it is, like you've just mentioned, it's trying to explain to people that there is choice. And obviously people have to make their own decisions then.
Yes.
But that mindset of, if your savings aren't making money, they are losing value and they're losing money. Which means 10,000 today won't be 10,000 spending power wise.
In 5 years' time, or next year, even next year, yeah, but in particular, it erodes fairly quickly. As well as that, what gets me as well is that the amount of people complain about inflation. And again, you should be complaining about inflation because it's been horrendous. But if you have money sitting on a bank account getting 0%, and you could move it and get, nearly 3% or 2.5%, whatever it is, you can't really be complaining about the cost of goods going up or the cost of services going up because you're not looking after your own money. So it is that trick of trying to look after what you have rather than what you're spending. Because, like I said, people always look for a bargain, or people always look and shop around for these different products, but they're just not bothering to do with their savings, which is crazy. I think maybe trust in the past would play a part, but again, with the European guarantee scheme with €100,000, like I said, if you have 2.9 million sitting there, you should be getting it, or an overnight account, getting it spread across.
Right. It's like when, we've seen customer testimonies where it's paid, in certain customers who are lucky enough to have quite a substantial nest egg, it's paid for a summer holiday by moving their savings, So, like, I think you would point out to your clients, saving isn't going to make you a rich or a poor person.
No.
But if you've worked hard to build it up, isn't it better to get a fair return for what you've worked for?
Yeah, I always say this. There's a whole lot going on with the Irish system. Why I get so, I suppose, passionate about it is that, number one, you're right. You work very hard to get your salary paid at the end of the week or the month, whatever your situation is. You pay a lot of income tax in this country compared to other countries, and so you're contributing massively back into society. And we also bailed out the 3 Irish banks. So now you're giving them your savings for them to go off and make money on. You wouldn't see it in The Simpsons. It just wouldn't exist in a comedy. So you can blame lack of, saying if you're lack of knowledge, we can upskill you on the knowledge piece. Lack of choice, up to 30 lenders or up to 30 banks now, or 29. And if it's lack of knowing what to do in relation to taxes, we have the solution for that as well. So trying to wrap all that up and just get consumers more confident. But you work way too hard, for your money to be sitting there, number one, devaluing, or number two, giving it to an Irish bank. Like if you look at your pay slip, if you're a listener today and you're a PAYE or you're a business owner, you look at your pay slip and you see USC, that's austerity from us bailing out the banks back in 2007. So we are actually still paying on a monthly basis, or an annual basis, whatever way you're taking, but you're still paying today for the mistakes of the banks from 2006. Every single one of us is paying for that through our taxes. And if you leave money sitting with an Irish bank, obviously I will call them out, AIB, Bank of Ireland or Permanent TSB, you're just doing the same. You're literally putting money in there for them to make money on, rather than going to Raisin and getting it sorted. So I do think it's great, and like I said, I am very proud that we've teamed up with you guys here at Ask Paul, because like I said, we've always been there to kind of champion what's right for the consumer to do when it comes to personal finances. I think this is it's a massive step in the right direction. So for any listeners that are interested, if you head over to askpaul.ie, you're going to find all the information, all the videos. I'm going to make a lot more content about this over the next couple of weeks and months and years, hopefully, and that's to make sure that savers are getting their bang for their buck and making sure they're getting money into their back pocket rather than the banks getting it. So another bit of bank bashing for the day, I think. Eoghan, thank you very much for joining me in the studio today. It's really appreciated. And thanks for all the work on the partnership as well. No, it's been a lot of work getting us to here, and I am, like I said, ridiculously proud, so thank you.
Yeah, likewise. Thank you very much.
Thanks.